Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the S&Ps come off a little bit on a headline that came out. They had actually popped up. We're trading around the 31, 34 area, popped up 9 handles, only to turn around and give that back. We're going to switch into that quickly. Only to turn around and give that back up. I saw a headline here from Navarro saying that those tariffs on December the 15th are still on, or no indication that the December tariffs on China won't be put on. And then we turned around and gave that back up. So like I said, we're just kind of bouncing around here, and at least on the SPOOs right now. Let's take a look here. Gold is still relatively quiet. We're going to move back into FX, so hang on. That just happened to be moving rather quickly, so I wanted to go in and point that out. We are seeing the dollar, although holding steady, still relatively a bit on the weaker side. We talked about on Friday how we saw this, on strong NFP numbers, this market, turn around. And despite 266,000 with also a back revision, we were not able to go in and take out this 97.89, and the market still remains on, with a downside tilt. We're still looking for a move eventually down to 97.20. Another market that we talked about yesterday was here on the cable, and it did reach our interim target, 3208. Now, that's a target we've actually been looking at for well over 3 weeks, saying, hey, if we can get above 2980, we talked about this, initial resistance 3050, but that the target that we'd be looking at on a short-term basis, or intermediate-term basis, I should say, would be 32.8. Now, one of the things that we pointed out yesterday was, and from over the weekend, what we did was we took the this whole range here, this lasted for well over 3 weeks, and took this range and then just added it on to the top here, which took us to 3242, apologize, and that actually confluences with this resistance level here at 3262, 3264. Now, once again, our interim target was 32.8. We did hit that. Now, obviously, that was precipitated on the news that came out that maybe the gain or the spread that we saw on what the election results could be, as far as for the conservatives, was not as great, or actually was tightening from that. So we saw that pull back down. But nonetheless, it actually came, I think it was the 32.15 we got, in our intermediate target level was 32.08. We did get a little bit of a bounce from the peso. We had our bias chart support yesterday for 1916. We did dip below here. We didn't make it at 16, but one of the things we talked about in the peso was that we'd already fallen. We were on our 5th straight day of a drop here, and thought, hey, the market's a little bit overstretched. Actually, I'm surprised it even held up here. I would have thought it would have dipped down to 16, maybe 15. But it's trying to make a little bit of stand here. But, just hugging here at the 1923.6 level. With that, let's just go and take a look at what we have as far as for data for the day. And that's actually rather sparse as we come into the States. At least initially, we actually have, of course, we have CPI coming out today, so I guess not so sparse. At first, I thought it looked like this was all we have, but we do have CPI at 8:30 Eastern, and then we have Canadian capacity utilization also at 8:30 Eastern. Let's see here. Oh, we do have obviously we have the FOMC. I don't think anyone's expecting any movement there whatsoever. But that's what we have on tap here. And once again, there's going to be Cleveland Fed CPIs. That's at 11 a.m. Eastern. That's a very, very low tier. But the key data that we're looking at is going to be core CPI at 8:30 Eastern, as well as Canadian capacity utilization. And we'll get into the stories. So the dollar has been rather quiet. So it says the Canadian dollar edged higher against the greenback on Tuesday. Now is that towards the close or at the close, sticking to a narrow range as investors await guidance on the Bank of Canada interest rate outlook and await prospects of the U.S. delaying additional tariffs on China. Bank of Governor Stephen Poloz, who will step down when a 7-year mandate expires in June, is due to speak on Thursday on seeing the big picture. Let's see here. Pola's speech will underscore the fact that they are on hold, certainly for now, said Sean Osborne. The hurdle for a rate cut here is quite high. Last week, the central bank left its benchmark interest rate at 1 3/4 and pointed to early signs the global economy was stabilizing and sources of resilience in the Canadian economy. Chances of a cut at the bank's next rate decision in January have declined to less than 15% from about 25% earlier this month. Wall Street's main stock indexes were little change, hovering near record highs. And let's go on and move on now to the Aussie. Aussie and New Zealand dollars drift off and data continues to diverge. The New Zealand dollar paired some recent gains on Wednesday as profit taking overshadowed the upbeat data and the promise of fiscal stimulus, while its Australian counterpart was saddled with another poor reading on local consumption. The Aussie was stuck at 68.12, having slipped further away from its recent peak of 68.62. Immediate support is around 68 cents. The Kiwi drifted off and it really needs to break last week's 4-month top of 65.76 to regain momentum. New Zealand's government on Wednesday trimmed its forecast for economic growth in a mid-year budget review and also announced $12 billion in increase infrastructure spending to be funded partly by new borrowing. The highlight was a substantial lift in plans capital spending, said Westpac's Dominic Stevens. This is a wise way for the government to run its infrastructure program, but it means the impact on the economy will be smaller. And it does mention it's planned over a period of many years. Domestic data continued its impressive run with retail spending on electronic cards jumping a surprisingly strong 2.6% in November from the previous month. Spending was boosted by global sales events, including Black Friday, but also extended to groceries and hospitality. The move was exactly the opposite in Australia, where a survey showed consumer sentiment had taken a turn for the worse. Westpac's Melbourne Institute Index of Consumer Sentiment fell 1.9% in December to down a hefty 8.9% from a year early. Unhappily for the retailers index, whether it was a good time to buy a major household item, fell 2.1% in the month, suggesting an extra cash from lower interest rates and tax rebates was still being saved rather than spent. Consumer spending clearly needs more support with interest rate cuts and moderate tax cuts, not provide enough of a boost given soft wages growth. In the absence of fiscal stimulus, we expect more rate cuts from the Reserve Bank with a 25 basis point cut in both February and March. And lastly, we're going to finish up with the pound, or sterling, I should say. The British pound slipped early on Wednesday after a poll showed a narrowing lead for Prime Minister Boris Johnson's Conservative Party, an election scheduled for later in the week, while U.S. dollar movement looked to the Federal Reserve's policy meeting. Investors were also focusing on whether Trump will impose tariffs on nearly $160 billion worth of Chinese goods on December 15th. Investors have generally believed the U.S. tariffs would be at least prolonged to salvage a trade deal with China. It is calmness before the storm. Markets have long believed the additional tariffs will be avoided, said Ayako Serra. Sterling fell to as low as 131 and last down at 131.40. It also slipped to 84.49 pound per euro. And touched earlier this week. A closely watched model from the pollsters YouGov showed Prime Minister is on the course to win a majority of 28 in Parliament on Thursday's election, down sharply from a forecast of 68. The pound had rallied for the past couple of months on rising expectations that Johnson will secure an outright majority in Parliament. It drew firmness from a Wall Street Journal report of officials from both the U.S. and China saying that the groundwork was being laid to push back the tariff deadline. The White House top economic and trade advisors are expecting to meet in coming days with Trump over that decision. One person briefed to the situation said, with regards to both the UK election and U.S.-China talks, markets have been leaning towards optimism recently, and therefore we need to be careful about market reactions if those expectations do not materialize. Economic uncertainty stemming from U.S.-China trade war had prompted the Federal Reserve to cut interest rates 3 times a year. This year, it's almost unanimously expected to leave interest rates unchanged on Wednesday. Fed policymakers updated projections for U.S. economy and interest rates will be the main key to focus on to assess whether the rate cuts will so far be enough to keep the economy rolling for another year. And the euro stood at 10.94, having risen 23 tenths of a percentage on Tuesday after the ZOO Research Institute gauged on economic morale among German investors showed improvement far beyond that of December. The index rose to a 2-year high of 10.7 from negative 2.1 a month earlier, exceeding even the highest forecast of a Reuters poll of economists. So with that, let's go on and move on to the analysis. Okay, so the euro held its ground on Tuesday, firming up as the day progressed. Resistance is 11.05. A daily close above that gets the bulls some momentum. Support is at 10.54. So that's the key here. I mean, it was a nice of the market to kind of hold this ground and kind of, bid itself up. But the key is we need to get a daily close above 11.05 to trigger some momentum. You can see that right here. So we need that daily close there, and support on the downside is going to be 10.54. So it says cable reached the intermediate target of 32.08 and then taken a news-inspired pause. Resistance remains 32.08. So once again, that was our intermediate target. We did hit that level and then we did back off, but of course that was news-inspired. And support is going to be at 30.87. So just below 31 in case you want to trigger those stops. We do have a little bit of a gravestone dojo here, but like I said, this pair obviously is being impacted by news. You could quickly to let this thing turn around and zoom up on Thursday. And so once again, obviously, we did hit that level, the 3208, but once again, pullback was news inspired. So far, that prior support wasn't bad. It was 3101. Let's go move into the Aussie though. So the Aussie has slid back towards bias chart support, which remains 67.90. Resistance is 68.65. So, we've taken this dip. We did not take out the 68 cents at this time, but our on the upside, we're still rather limited. I mean, when you look at this, put this in a little bit of context, we're still trading in such a very, very tight range. I mean, look at this. 68.31, this level, 68 cents right here. I mean, it's just barely even moving. Resistance is going to be 68.65 and 67.90 on the downside. So. And because we held here and we got this momentum here, we're still keeping it with a little bit of a bullish mode for now. It's going to move in now to the Kiwi. The Kiwi continues to maintain its bid despite the recent run. Resistance is 65.87. And you can see here that comes in right here with that 50% retracement here. We're support at 65.20. So we're keeping it relatively tight. Actually, that appears to have been the low today right now. Oh, almost. The low today so far has been what? 65.22. So our support is 65.20 for today. Had that in place since yesterday. 65.87. No changes. Well, no changes here in the dollar CAD. We saw that smart rebound here on Friday, which came up here and tagged this lower level here at 32.79. And we're marking time. That's it. We're not making any changes here on the dollar CAD in the sense that it has not moved. It's staying just relatively quiet. I guess, like they said, they do have Pola speaking today. I don't know how much of the theme of his speech is called the big picture. So may not see anything that he may impart that'll suggest a big change, but 32.72 on the upside and 32.05 on the downside. But we have Pola speaking today. So with the peso, the dollar peso is attempting to stabilize at the 19.23.6 pivot. Support remains at 19.16 with resistance at 19.32. So this pivot has been around since seems like forever, but one of the things that, like I said, we did have 1916. That's going to remain the same as far as the bias chart support of 1916. And on the upside, we're looking at 1932. So we're still trading in a relatively quiet range, although they're trying to stabilize. But once again, look at this, 5 straight down days, and we're just kind of trying to hold our ground. No changes there. 1916 is going to meet the bias chart support with resistance at 1932. And here's another one here also, the Dalian just trade. Despite these headlines that we've been seeing back and forth regarding China trade news, it hasn't been impacted really in one way or the other. Although the bid still remains in the indices, it has not been able to go and move any higher. And resistance on the upside is going to go on and remain at 887. And on the downside, we're looking at 828. Still a bit of a, considering the range we're in, a bit of a pullback to get down here to 828. But that's what we're looking at, down here at 828 for bias chart support. And we've kept that in place, which is the 887. High today, it looks like, what, 885. Once again, tight ranges. We've got the Fed today. Also, obviously, the risk event with UK election and whether or not they impose tariffs with China, U.S. So with the dollar index still eyeing a move to 97.20, unless the dollar index can close above 97.87. I put 87, but I meant put 97.89 here. That's that pivot that's been around for quite some time. It's a huge weekly level. You can see here how sentiment has changed back and forth as we've stayed above or either below. Now, once again, to reiterate, we had that strong NFP number on Friday, 266,000 with upside revision, and it still was not enough to get us above 97.89. So we need a daily close above 97.89 to negate the downside. Resistance is going to remain at 97.79. I'm looking for a downside move for 97.20. So no, let's take a look here. We had a 97.37. We're going to go and move this down to the 20. With that, we'll go and move on into the cross rates. We haven't seen very much movement here in the FX market overall across the board. Obviously, with some of these risk events not coming through until as we move on into the week. Obviously, now we're into the midweek, but tomorrow's UK election. The Fed, no one's expecting any changes there. And as I mentioned, also the ECB's Lagarde tomorrow, and then whether or not the tariffs will be imposed on China on the weekend. So once again, we're still trading in a relatively tight range. Looking here at the Kiwi yen, we talked about that zone yesterday. You can see here the zone coming in here, 71.45 up to 71.77 right here. And that's the resistance right now. So there's no change here on the upside, which is going to be 71.45. The downside, we're looking at 70.85. So we have dipped below 71 cents. We made it down to 70.90. 70.85 is our bias chart support. So no changes here on the Kiwi yen. The euro yen, once again, as I mentioned, we're trading still quiet, rather quiet in this range. Maybe we'll get some movement post ECB, although I'm not sure what folks are looking at that point, but we'll see. But we mentioned 2030 as our resistance. We're actually decently above the 2030 at this point. We actually closed at 2058, so we're going to have to give the levels a better push up here. And you can see here coming across here, we're looking, this is going to be the key right now, is 2077. Actually, let's go and draw this in here. There you go. So it's going to be 2077 on the upside. And we came rather close already today. It's rather interesting because we lost the 2030 only to regain it back, and we've tested up here, but we would need a daily close about 2077 to spark further upside. On the downside, we're going to go and keep this 1971 only because they had triggered this move lower. So if they fall back, we'd still be looking for a move to 1971. But a little bit of a change here. And the euro yen to go and recapture that. Let's go and move into the euro odd. This pair is just, it seems like it's all over the place. We talked about this on Monday. You know, we had the market held up and actually did very, very well when it reclaimed this area here. And we had on the bullish tilt. And then we, like I said, you saw the market break lower here and here. And then we get this inverted hammer. And it looks like, okay, the market's going to make a stand. And we get a solid day. I mean, we didn't close above this key level, which should have been 62.65. But we, you know, nice rebound here, only to have a bearish engulfing level. And my thought coming into from the weekend was, okay, we're going to have to move lower now because this is just, you know, terrible right here. I mean, from a technical standpoint, is that you make a stand and then you get a bearish engulfing bar here. But then we turn around and we add 2 up days here, and now we're weakening a bit. So this is really an odd move, but let's go on and that's going to be a resistance right there. 62.93. And I'm actually going to change this to range. But it's going to be 62.93. And on the downside, This one is odd. Actually going to be right there at 61.66. And let's go and move into the Euro Kiwi. Well, we were looking at, we had a range impact or levels here after this strong move to the downside. Look, you see, once we broke, we went into this yesterday. I think we may have even mentioned that. I don't know if we, I think we did mention the daily roundup, but you can see it's just been down, 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 down. We finally made it actually down to 68.06, which I thought on the best case scenario, if you were bearish, would have made it down to 69.42. But we did come down to 68.06. We were looking for a bounce. We had our ranges in place for 69.42. We closed right there and we're kind of making an attempt to push a little bit higher, but we actually had our resistance coming in at 69, or actually we're looking potentially this market to go up to 69.65. We actually have gone beyond that today. You know, when we look here, you can see the 70 cents. So I guess for now, although this market is extremely oversold, you can look at the 70 cents, but it's very, very, very oversold. If the euro can get some strength, and it may post ECB with Lagarde, we're going to go right here, which is going to be 70.56. So on the upside, we're going to give it some room here because it's so oversold. Downside is going to come in right there. $68.89. Let's go move into the Oceania. Well, we're just hovering here at the 74.02, and really there's no change here with the Oceania. So downside support is 73.75, upside is 74.38, and we're just trading as quiet can be. This is simply not even responding to any of the news at all. I haven't seen the Aussie in this quiet, and I can't even remember when. Look at that. It's just unbelievable. Let's go and move in now to the guppy. Well, upside resistance remains the same, 43.36 and 42.40. And actually, if you think about it, we held pretty good overall. If you think about, you know, the news that came out on the polls, or the YouGov poll that came out, and obviously we were above the 43.36, but still, this pair is still remaining rather stout. Now, I think that would be an understatement. And still above this rather extreme trend line, but it's still holding up above here. It's going to be interesting. That obviously going to be some big moves on Thursday, no doubt. So it's going to be 43.36, no changes on the upside. Downside is 42.40. With that, we're going to move into the sterling on. Now, this one is rather interesting here. Talked about this, mentioned, I think also might have mentioned it also on the daily roundup, is that we talked about 94.07 being a target if we were to get above 90.58. And we did obviously get that eventual move beyond 90.58. Now, I thought it would take some time to get to 94.07, but lo and behold, yesterday we just about tagged it. Yesterday, high was what, 93.89. So we were just about there anyway. Obviously, like I said, the YouGov poll came out that induced some selling and pullback, but our target was for 94.07, and 94.28 is actually the 161% extension of this area right here. We can actually there we go. So we came pretty close. We'll move this over here. Like I said, when the selection comes out, who knows how this is going to play out? But we've had rather, I don't want to say extreme move, but it's been a very, very strong move here. We are so close. We've already pulled back, but I'm not sure how much further this can go on and push up. But of course, with the weakness that we've seen in the Aussie, certainly that door's open, but for them to even push even further, and I dare say even maybe up to 95, but 94.07 was the number we were looking for, which was our level that we thought that the market could eventually get to if we're going to call it a target. And obviously that confluences with 94.28 being the 161% of this range. So 94.07, which was the target. We had our bias charge report here at 92.58 from yesterday. For today, it actually comes in. Move this all the way. This level right there. 92.07. 92.07. And let's go and take a look at some of the other markets. What we did see as we came into the webinar, we had already seen the market quickly pop up, and then only to reverse those gains. Once again, regarding the China trade headline, what the market continued to remain bid, and the presumption is that they are going to go on and delay those those tariffs. And I think that that's, I don't want to say it's safe to say that that's going to happen, but certainly I think that's where the market's leaning to. They know that we've got a little bit of a taste the prior week when we saw this market fall. Um, and I don't think they want to go in that direction. So my thought is that the market's going to probably stay relatively bid all the way through Sunday, and there probably will be an announcement that they're going to delay the headlines. And how long this story drags on, I really don't know. It just keeps on dragging on and dragging on. Gold still remains just holding here, and once again, we're trading in a very quiet range here with gold. We've spoken about how on the XAU it's important to hold that 1454, which it has done, and in the Feb futures we're here at 1458, and this market has done relatively well, holding up when you consider where equities are. So it's done very, very well here. No real movement to speak of, and taking a look at crude oil, we still remain relatively bid here. Look at that. Now that being said, bonds are still still holding up relatively well after the onslaught that we saw last week, and quite the onslaught when S&Ps had come off quite a bit, and we talked about that. We actually came into that good daily support level of 3074, but we saw the bonds really take off, and there was some reallocation. I think a lot of folks got knocked for a pretty good loop as the S&Ps came back, and we saw bonds completely come apart, take out the lows here, only to rebound a little bit. Now, once again, we're holding okay, but I think people are a little bit coy about stepping too much on the long side after getting knocked for a pretty good loop the previous week. But once again, it's a relatively quiet session. We do have FOMC today. No one's expecting anything from there. We do have ECB tomorrow with Lagarde's first meeting as head of the ECB. Obviously, the big event really is going to be the UK election tomorrow, and whether or not they're going to announce the tariffs on Sunday. Those are the things that keeping these markets in check as far as volatility. So we may see a little bit of volatility tomorrow once we get past ECB, and then definitely with UK election. Thanks for joining us here on the European crossover webinar, and we'll see you in the chat room.